Hello traders, welcome to my channel. We have started Forex price action trading course on your demand. Price action. The term price action refers to the price movement which happens in any security in a given period of time. Jesse Livermore was one of the most significant practitioners of price action analysis. He was the one who invented price action trading in the 20th century. The fundamental belief of price action is that price never lies, so price action methodology removes all the technical indicators and only basic price movement data is used to generate entry and exit signals for trade. Price action is one of the branches or a part of technical analysis which makes use of only the past and the current price to predict the future price movement of any security. What is price action trading? Price action trading is also known as clean chart trading. Price action trading takes place when you base your trading decision, buying and selling, on the price behavior of any security. Price action trader focus on what has happened and what is happening in the market as opposed to why it is happening. As mentioned earlier, price action trading is normally based on the naked price chart without making use of any indicators like oscillators, pivot points, moving averages, etc. A price action trader does not give much weightage to technical indicators like MACD, RSI, ADX and so on. A price action trader is only concerned with past and current price data points which include open, high, low, close price, and hence price action traders mainly use candlestick charts or bar charts. Price action trading is purely based on concept of demand and supply. If the price of any security goes up, it simply means that there are more buyers than sellers, which pushes the price of the security higher. In other words, demand is higher than supply. Similarly, if the price of any security goes down, it simply means that there are more sellers than buyers, which pushes the price of the security lower. In other words, supply is higher than demand. On the next slide I have presented two charts, one showing just price action and another one loaded with indicators along with the price. Chart below is XAU/USD on daily time frame price action chart, which shows a clear picture of the price movement in a simple manner. Chart below is XAU/USD on daily time frame chart loaded with commonly used technical indicators like Bollinger Bands, etc. Now by looking at both the charts I am sure you will say that the first chart is easy to read and understand while the second chart, loaded with indicators, looks a bit confusing and messy. Hence, if you are a beginner and trying to learn technical analysis, I would always suggest to start with learning about price action before you think of using indicators, because such an approach will help you to easily understand what the chart is saying. It will also become much easier for you to spot chart patterns on a price action chart. If you are a new, then after watching this video, I would suggest you to see a few charts on a daily basis and try to analyze them as to what candlesticks are saying and spot chart patterns in them. Slowly but surely you will gain confidence, which will help you a lot in your trading. Basic principles of price action trading. Before proceeding further, let me list out the main concepts or principles on which price action trading is based. 1. Support and resistance. 2. Candlesticks and chart patterns. 3. Trends. 4. Market reaction or price rejection, price acceptance. 5. Structure of the market. All these concepts will be discussed in detail in the episodes ahead in this course. Now let us look at some advantages and disadvantages of price action trading. Advantages of price action trading. 1. It helps you to trade in real time. Price action gives you the edge in real time frame, as it does not include technical indicators, most of which are lagging in nature as they are derived using past price and volume data. 2. Easy to understand. As explained earlier, understanding price action is an easy task, because you are only looking at just price data points, which makes it easy to identify. 3. It is very simple to trade. If you can understand where to plot support and resistance, then price action trading will become very easy for you. I have seen many people using a cluster of indicators and then identifying where to put buy and sell order, which becomes a hurdle especially for newcomers because you have messed up with your trading setup, and that is the reason I always believe in keeping the trading setup very simple, and to my mind, it is a must thing to do in the trading parlance. For it is back-tested and time-tested strategy. The main principles of price action trading, such as trends, support, and resistance, have been back-tested for many years, and I have been using these simple setups over the last many years. It works very well as far as my understanding goes. 5. It provides clearly entry and exit levels by using the concept of support and resistance, which is the heart and backbone of price action trading. You can see proper demand and supply zones and can easily identify entry and exit levels for your trades. Disadvantages of price action trading. 1. Contradictory in terms of consensus view. Price action often gives different signals on different time frames, which may create confusion to newcomers. For example, in case of a particular stock, when analyzed on different time frames, I might see a bullish Maribozu and you might spot a bullish engulfing, or you might find trend line support and I might find the horizontal support. Hence one has to be very careful. 2. It gives false signals. Using price action will not always give you correct signals, which none of the setup or strategy gives. It is not that you will be able to make money on every trade you do, so you have to learn to stay with false signals. 3. Provides very few trading opportunities. The number of opportunities you will get will be very few in case of price action trading as compared to trading based on indicators. So you have to make sure that you will wait for the right opportunity and then act on it. Hence it is often said that price action trading is a waiting game and requires patience. 4. Sometimes signals are difficult to predict. A person who is completely new to trading or technical analysis might find price action trading to be tough in the form of bullish and bearish candle or chart patterns as compared to indicator-based trading. Now when it comes to trading in the stock market or any other financial market, remember this quote of famous American investor and writer, Howard Marks. There's no magic formula for being on top. Eventually, you have to see which system and style is working best for you, and based on that you have to decide which style of trading suits you, price action trading or indicator-based trading. I shall conclude this introductory chapter with an important advice for all newcomers. Never think of becoming a billionaire or making tons of money overnight, because that is never going to happen. So guys, I hope you liked this video, which was introduction of price action. In next episode we will talk about support and resistance. See you in our next episode.